here we are. Priceline had a nice gap overnight with the big gap up in the futures today. We will be telling people here that the actual intraday high was 537. We have not, in the past, we took some quick shorts from 520 down to right around that 505 handle or whatever it was, 508. And then we got out and it wanted to go up, back up to the volatility. That's why we showed the volatility calls, so that if it wanted to go that way, if you're cheap up above the market, you can, you got something working just for that reason right here. And that's exactly what we had did last week and the prior weeks that we were dealing on Priceline. On an intraday level, like Apple, this is the big monster gap to the top. Right now, the markets are open an hour and 15 minutes. Today's date is 4/20 of 2011. Happy Easter to everyone. We will be now really going through the weekly and the put options on Priceline, because we're going to hit a point at some point, and we've been very patient, knowing that all of these things that, because we've been down the road for so many years, we already know that these things can happen. So that's why buying up and out of the money volatility and call options is a way to go, because they're really cheap. So when Priceline had originally corrected itself, and I'll be happy to show that to people on a 60-minute chart of the SMF platform, which is right here, is way back over here. Here's the 60-minute right here. You can, when we were taking this thing from here down to here, this is at, we were getting out around the 505 handle. And when we got down here, we examined way up and out of the money calls as a volatility price action hedge. And what does that really mean? Well, you'll have to get together with one of our certified SMF MMTs who will be happy to teach you that for a fee. Okay? The people that complete their apprenticeship, yearly apprenticeship program here, are the ones that are going to be teaching you how to buy up and out of the volatility, so that you are exactly where you need to be. Okay? So it's very important that when you're looking at both a bull market and a bear market, particularly in a very, very overbought environment, but the earnings season, the gap ups, these stocks, doesn't matter how overbought Priceline is, they're still going to gap with the broader futures gap. But we're going to hit a top line, just as we said over the weekend, is the reason why we haven't, we had volatility. When we were down here, we bought calls way up and out of the money. We had taken that trend down using some put options here at that time. When it didn't want to go any lower here on a 60, that's where it was very cheap for up and out of the money volatility. So that for some odd reason, you get these big moves and gaps with earnings volatility and market volatility and price action volatility, is you make money very cheaply. Because if you made that money here, it affords you the ability to buy up and out of the money hedge against these profits. So you made these profits, you take a little bit of them, and you buy the calls up and out of the money. And when that happens, you get another nice whopping profit. So basically, it's a $3.23 per line move in our platform. And you can see the gap, and you can see the gap right up here to the high right here with the slight distribution. And that distribution is coming into play right here on that 3-minute. And we're going to be featuring Priceline with our MMTs for position management trades, meaning that that volatility, both sides, below the market and above the market, mastering that is the way you want to be. I would go to the website, make an inquiry, that's what you want to learn, is how to trade options with risk management, price action, volatility, risk management, both to the upside and downside. And this is a Priceline, and we're going to be extremely overbought. That's part of irrational exuberances, is that when Priceline does report its earnings, I can't imagine that they have a lot of great things to say looking forward. Their biggest revenue streams are from people around the world, and that's why they've done so well. Not so much from the U.S. consumer. However, the international consumer has been spending a lot of money flying around the world. I don't see where a lot of people in the next 3 quarters on Priceline are, if we continue to stay at very high elevated airline cost to the U.S. consumer anyway, and that jet fuel is going to be making all-time highs ever, is that somewhere those costs are going to have to be passed on. That's where the consumer can clam up, and that could be a future-looking problem for Priceline. It's always good to get them when they're up at the top. Buy a $100 put option below the market because it's very cheap on a day like today.